Hello everybody. Today I'll be talking to you about the accounting concepts, importance of accounting concepts, and I'll be discussing in detail about a concept which is extremely important, which is called as an accrual concept. So first of all, what is an accounting concept? Accounting concept means it represents the rules of accounting. Concepts, I'll take it up this later. So first we will deal with accounting concepts. Accounting concepts represents the rules of accountancy. So there are already some rules. What are the rules? The rules of double entry and the rules of debit and credit. Right. So despite these two rules, why are we supposed to have accounting concept rule? See, this is sufficient. The rule of double entry system and the rules of debit and credit is sufficient only for the purpose, only from the perspective of, matching the balance sheet or tying up your financial statements. It does not give you a true and fair view of the financial statements. So let's say the total of the debit and credit should match, then you are going to follow the rules of double entry system and the rules of debit and credit. So that is sufficient for you to just match the source of the funding and the application of the funding. That means I'm talking about the balance sheet. So that is sufficient. If you have to just match arithmetically, yes, these two are sufficient. But if you want to have the true and fair view of the financial statements, so what do you mean by true and fair view of the financial statements? Let's say, for example, you should not be having 11 months of rent and 12 months of sale. Right. Although it matches, all the balance sheet matches, you should not be having this. You mean to say you need to match your expenses with the income. So that is one concept which is discussed in matching principle concept. Matching principle concept. So we'll be dealing that later. And also we have something called separate entity concept. We cannot club all the proprietary expenses, these personal expenses with the business expenditure. Although anyways the business income will go back to proprietor itself. So the proprietor asks the accountant, what is the problem in me clubbing all my personal expenses with the business expenses? Anyways the business profit is anyways mine. So anyways at the year end you're going to enjoy the profits. So the answer for that, the technical answer, what the accountant should give is, if I'm going to mix the proprietary expenses with the business expenses, no doubt if the profit will go to the proprietor, but I need to keep this business expenses away from the proprietor's expenses. For a reason, I need to know the performance of the business. Only if I know the performance of the business, only then I'll be able to read where the business is heading towards. Is it heading towards profit or loss? Is it constrained of working capital or not? Whether can I expand the business or not? So all these things. So you need to keep your books of accounts or the business expenses and income away from the proprietors. No doubt that the proprietor is the ultimate beneficiary, but yet from the accounting perspective, the rule is rather that you need to separate these expenses, otherwise you will not be able to, for simple reason, you will not be able to make out the performance of the business. And also, let's say, for example, the revenue part, the recognition part. You cannot send the goods today. That is, let's say, at the end of the year, considering the fact that the financial year is 2018, and it starts from January 18 to December 18. So you cannot send the goods on 28th of December, and that reaches your customer on 3rd of Jan. And you cannot say that I've just raised my bill on 28th December, therefore my sale is on 28th December. No. Because there are some criteria in the revenue recognition which says that the goods, only after it is transferred to the customer, you are supposed to recognize the revenue. So that is one of the criteria. So when all the criteria are fulfilled, which we will discuss later. So when one of the criteria is there should be a transfer of goods and services. So the goods are in transit as of the year end, that is 31st December. So therefore, I cannot recognize this as a sale. It is not a sale as on 28th December or even as on 31st December, because it is still in transit. So how are we going to treat the goods? The goods are called as closing stock. It should be treated as closing stock. It becomes an asset to the company and it is taken to the balance sheet. So if I had not followed the concept, then I would have mistakenly added this sale, which is not a sale, which is not delivered as on 31st December, I would have added this to the financial year 2018. So therefore, this would not give me a fair view of the financial statements. So similarly, there are so many concepts, accrual concept, the accounting period concept, the dual entity concept, dual aspect concept. So therefore, objective evidence concept. So you need to be conversant with all these concepts and also conventions, which is a convention of materiality, convention of conservatism. That is nothing but the provisioning for the bad debts. So only when you're very thorough with the accounting concepts, you will be able to create, build a good, a true and fair financial statement. Otherwise, it is not a reliable financial statement, although the balance sheet is matching. So that is the importance of these accounting concepts. So now, in one word, it is nothing but the accounting concepts takes care of true and fair view of the financial statements. Financial statements. Okay, so this is the importance of accounting concepts. So now we will talk about accrual concept. So what is accrual concept? See, we maintain the books. The rule says that the maintenance of books can be on a cash basis or on an accrual basis. But now, as per the government, we are supposed to follow the accrual concept. So what does an accrual concept mean? Let's say, for example, you have purchased the goods on 12th of January 2018. Let us take up the same financial year as an example, that is 2018. So you have purchased on 12th of January and you have made the payment of 18th of February 2018. So this is the purchases and this is the payment. Okay. So in this case, what happens is you are supposed to recognize the expenditure in the period to which it relates to. It is not that we are supposed to recognize the expenditure only at the time of making the payment. That would be absolutely wrong. Because in the meantime, what if you made a sale? You have the goods, you have not recognized the purchases, and in the meantime, that is in the month of January, that is on 20th January, you sold the same goods for cash. So that means you have booked a sale, okay, without purchases. How is that possible? So therefore, the accrual concept says that you are supposed to recognize the expenditure in the period to which it relates to or to which it is attributable to. So in this case, we are going to recognize the purchases or the expenses, any expenditure on that date on which it is incurred and not on the date when we have made the payment. Similarly, my income also, let us say I have made sale on 20th Jan 2018. So this is my sale, and my receipt is on 15th Feb 2018. So I will book my sale on 20th Jan 2018 and not on 15th Feb 2018 when I get my money. What if there is a delay by 3 months? Let us say it is from 15th of April 2018. The customer is going to make the payment. So till such time, should I not book my sale? That would be absolutely wrong. So you should book your sale as on, during in the period to which it relates to. So this is called as accrual concept. There are two aspects to it. One is when the bill is received. When the bill is received. When the bill is received, yes, you're going to book it on the date on which you have incurred or you have made a purchases, etc. So when the bill is not received, especially this happens at the year end, or if you're closing your books at the month end, this is a common scenario. Let us say you're closing your books at the year end. So for the month of December 2008, all your bills, you're going to receive it either on the next month, that is naturally you're going to receive it next month, that is January 2019, or maybe some bills you may further get delayed by February or March 2019. There is a probability. So in this case, what we are supposed to do is we are supposed to accrue the expenses in December 2018 because the expenses are incurred just because he has not supplied us the bill or he has not shared the bill, we cannot say we cannot be doing that mistake of not accounting the bill. So we need to account the bill in the month of December 2018. So as a provision, this is called as a provisional entry. So you need to book the expenses. Let us say expenses, you're going to debit it, and you're going to accrue the expenses. Accrued expenses, you're going to credit. So to whatever the extent of the amount. So generally, what happens the year end, they make an estimate of the expenses because they need to close the books and they need to close for the sake of audit. So now they are going to make an estimate of what the amount of expenses the bills are not received, and these expenses are accrued. So this is called as provision for expenses or accrued expenses. This is what we need to follow in case when the bill is not received. So now why are we supposed to do this? Because if I'm not going to book the expenditure for the month of December 2018 just because the bills are received in the month of Jan 2019, so then 1 month of complete expenditure I'll have to miss out. That means in the financial year there will only be 11 months of expenditure and 12 months of sale. That would be absolutely wrong, and that would definitely contradict my other accounting concept, which is called as matching principle concept. So we will deal with this in the next session. So this will contradict my matching principle concept. So we need to accrue the expenditure or income for reason, because otherwise you'll not get a true and fair view of the financial statement. So this is what I wanted to discuss with you about the accrual concept. Okay, so if you have any questions, you can just ping me, or you can email me. So I'll be able to further clarify your queries. Okay, thank you so much. Thanks for your time.